After waiting for what felt like an eternity, last Thursday, the markets finally came to an important realization about Medical Properties Trust. Given the recent developments surrounding this company and their troubled client Steward Healthcare, the markets finally realized that MPW was significantly undervalued. And what we're observing is the beginning of the long-awaited recovery that we've been waiting for. On Thursday, the share price of MPW soared by over 16%, which was then followed on Friday by another surge of 13.75%, bringing the 5-day total streak to now 30%. So today we're going to take a look at the most recent developments for this healthcare REIT and determine what the future could hold for Medical Properties Trust. I last covered this stock 3 months ago in a video titled Medical Properties Trust Has Never Looked Better, so I'll bring you up to speed with what's been happening since then. Steward Health was getting ready to start finding buyers for their properties after they declared bankruptcy on May 6th. It was announced on June 6th that Steward Health had received an additional $225 million in new loans in order to stay afloat while they were finding new buyers for their hospitals. It was during this time that there was a lot of speculation as to whether or not there'd be enough interest in these properties and if they could even find buyers for them. It was reported that many of Steward Health's properties were in rough condition. Reports that some of them were full of issues, including broken elevators, water leaks, and many needed upgrades and renovations, made a lot of investors bearish on their outlook. And in total, as of June of this year, Steward had 36 buildings that were owned by Medical Properties Trust that they needed to unload. On June 28th, Optum, which is owned by United Health, withdrew their bid to buy their physicians network. MPW would fall in share price on this news, and it only increased speculation that buyers weren't going to buy all or even the majority of their properties. Making things even worse was that Medical Properties Trust would later announce that they'd be cutting their dividend again by another 46%. So it was nearly cut in half after the company had already cut it in half in August of last year. When a company announces a dividend cut, it usually results in a dramatic fall in share price. However, if the market believes the company would be better off not paying such a high dividend, then it can result in the share price not negatively reacting to it. In the case of MPW, when they did announce a second dividend cut, it didn't really result in much of a loss in share price. Although it was unfortunate, it was a sign that Medical Properties had done a good thing by cutting it to better position themselves for the future. So with a buyer pulling out and a second dividend reduction, things were looking worse for this REIT. It was also during this time that the situation revolving around Steward Health was gaining national attention. The collapse of this hospital company received national media coverage regarding their poor management. As I predicted in pretty much every medical property video I ever made, I knew that local governments would not allow Steward to just close up all of their hospitals. It would negatively impact the lives of millions of people who live near them and rely on them. Steward would ultimately get $30 million from the state of Massachusetts to support 6 of their hospitals. The company would later get grilled by lawmakers for not taking better care of the company and needing government assistance. But then finally, as their properties began accepting offers, Steward Health did start finding buyers. On July 22nd, Steward Health got buyers for 2 of their hospitals, one in Arkansas and one in Louisiana. On August 5th, they sold 6 additional hospitals. Throughout the process, it was becoming clear that there was a demand for their facilities. If their properties did need renovations, then the real estate was still proving to be more valuable than what a lot of people speculated. Then finally the big day came on September 11th. Medical Properties Trust had issued a press release titled, Medical Properties Trust Takes Control of Its Real Estate from Steward Healthcare, which gave a major update on the issue. According to the press release, it says, Medical Properties Trust Inc. today announced that it had reached a global settlement agreement with Steward Healthcare System, its secured lenders, and the Unsecured Creditors Committee that restores MPT's control over its real estate, severs its relationship with Steward, and facilitates the immediate transition of operations to quality replacement operators at 15 hospitals around the country. The settlement agreement involves 23 hospitals previously operated by Steward, which will remain following the anticipated Space Coast transition described later in the press release. MPT has already reached definitive agreements with 4 tenants to immediately lease and operate 15 hospitals in Arizona, Florida, Louisiana, Ohio, and Texas. Effective September 11, 2024, these replacement operators will be the beneficiaries of operating revenue and have responsibility for the expenses of the hospitals each will manage for Steward on an intern basis until purchase agreements can be finalized with Steward with respect to the operations. This is what caused the dramatic increase in their stock share price. Medical Properties Trust has now officially dropped Steward Health and they're ready to begin rebuilding themselves. Plus, with interest rate cuts on the horizon, this will also benefit the company along with the REIT sector in general. This is a major victory for shareholders of their stock, but the question we should be asking now is how high will Medical Properties stock actually go in share price? Looking at the total performance of MPW, you'll see that it's down significantly from its all-time high of roughly $24 a share back in 2022, but their stock won't go this high anytime soon for several reasons. First, Medical Properties Trust is now a smaller company than it was 2 years ago. Over the past couple years, this company did unload several of their facilities, so they aren't a part of their portfolio anymore. On their website, it says they have 435 properties and around 42,000 beds. 2 years ago, though, their website said they had 444 properties and 44,000 beds. So Medical Properties Trust is just a tad bit smaller of a company. Second, in order for MPW to soar close to $20 per share again, the market needs to be convinced that MPW will be able to start growing again. I listened to their latest earnings call, and not surprisingly, there weren't any discussions regarding if they were going to grow their portfolio again soon. They're still completely focused on resolving the issues with their existing properties, which makes sense, so we'll have to see what their game plan is going to be in terms of growing again, but they'll likely remain focused on finishing their existing problems. And then third, there also is the fact that its dividend has been greatly reduced. If MPW was to trade around $20 per share again soon, then its yield would be so low that it wouldn't attract a number of shareholders who like REITs in the first place. There's also some additional concerns that could negatively impact this company. People have been bringing up the issue they've had with their debt and how that'll negatively impact them starting next year. According to their latest quarterly report, Medical Properties will have 13.6% of their debt mature, or about $1.2 billion worth. This debt was taken out while interest rates were much lower than what they are today. If the company's going to refinance this debt, this could cost them more money if interest rates remain high next year. In the next 3 years, they're going to have over $5 billion worth of debt reach maturity. But this is also going to depend on your views as to what the Fed's going to do with interest rates. There's continued speculation about an upcoming recession. If the economy gets worse, then the Fed's going to be more aggressive in cutting interest rates. If we do get a soft landing, then the Fed's likely not going to be as aggressive when it comes to cutting rates. The good news is that hospitals are mission critical regardless of the economy. So ultimately, I don't expect MPW to shoot up close to $20 anytime soon. At the same time, it is still trading at a very large discount. But because of the dividend cuts, the stock is now more attractive for growth-oriented investors as opposed to those seeking income, like myself. My plan is to keep holding on to my position in this company, but because of the dividend cuts, I'm really only hanging on for the capital gains at this point. Because I'm an income-focused investor, MPW is now less attractive with its dividend being reduced so much. I'm going to be really curious about what their game plan is on growing their dividend again, but the odds of it coming anywhere close to what it was 2 years ago anytime soon is extremely unlikely. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.